I don't care if you're a real estate agent, an insurance agent, or you're a mortgage loan originator. Whatever industry you currently operate in, more than likely you have a lead problem. More than likely you want more leads, and more than likely you've always thought, man, if there was a magic pill or a button I could click and then magically, poof, voila, leads started landing in my inbox, you'd be all over it. And so many of you have tried. You've tried to leverage Meta. You've tried to leverage Google. You've tried to create leads online so that you don't have to do as much outbound and you can take more inbound. Well, in today's episode, Marketing Mike and I are going to dive super deep into something that he is a subject matter expert in, and that's programmatic marketing. How can he help professionals like us generate more referrals, generate more leads, fund more loans, make more money so that we can retire better, retire earlier, as well as give back to the less fortunate. Check this out, y'all. They don't teach this shit in school, but they should. Welcome to the Loan Officer Podcast, hosted by me, Dustin Owen, one of the most influential people in the mortgage industry, along with my friends who've lived it, built it, failed at it, fixed it, and scaled it. This is not a show just for mortgage professionals. This is everything I learned because I became a mortgage loan originator. This is the Loan Officer Podcast. Ladies and gentlemen, boys and girls, children 18 plus, you are tuned in to the Loan Officer Podcast with me, Dustin Owen, and with me from the TLOP team, I've got Marketing Mike and our producer extraordinaire. We call her Special K. You call her Karina Mojica. What's up, y'all?
What's happening?
Oh, man, I got a little sun on me.
Yeah, dude.
You see that?
That trip, I'm so jealous I didn't go.
Yeah, so for those that don't follow me on IG, one, you should, at the Loan Officer Podcast. But second, you would have seen in my stories yesterday that me and 5 other guys ran 90 miles offshore into the Gulf of Mexico.
Caught monsters.
And absolutely slayed it. We limited out on red snapper. We limited out on red grouper, right? So that's 2 per person per boat. So we had 12 red snapper. We had 12 red grouper. Plus we caught other fish. Like we caught a scamp grouper. We caught some mangrove snapper.
Yeah, you guys had a haul.
30 fish. I think we caught well over 75.
Wow.
Yeah, so I played hooky. I did not come to work on Monday.
You sure
and
did.
I totally played hooky. But yeah, so
jealous.
If you see a little bit of sun on my legs,
you
on my
need
face,
it though.
on my head,
You're good.
You know, I got a little vitamin C. I got a little vitamin C by being out there on the water. No, it was definitely a great day. But today's going to be a great day because we're gonna jump into a topic that, Mike, you're the expert on.
Yeah, I'm super excited, and I'm surprised we haven't done this earlier. It was a good idea you had.
It was a great idea.
Occasionally
I'll come up with a great idea. This is going to be one of those. No, and I'm excited for the audience because I hear this all the time, which is, I want to run ads. How do people get leads on Facebook? And how do people get to my website? Right? And I really, what they're saying to me is, I hate calling on real estate agents. I don't want to write and send a newsletter. I don't want to attend that networking function. And I really wished I could just spend a couple $1,000s and someone could make all my pains and worries go away. Now, I would like to believe, and you're going to explain to us, there is no magic pill.
Right.
There is no click button and all my pains and worries go away.
Correct.
There's no Ozempic shot.
Spoiler alert.
Yeah, spoiler alert. Yeah, spoiler alert. There's no Ozempic shot for your business.
Right.
And if it was, it'd cost you $1 million because it would make you 10 times that.
Yeah, but there are some paths.
Yes, there's best practices.
Best practices.
Yeah, I mean, a little bit of knowledge can take you a far distance in your business if you understand that little bit of knowledge. So that's what we're going to dive deep into. So for those tuning in, it's like, if you ever thought about how could I generate leads on Facebook and Instagram or on YouTube or on Google? How do I optimize my website? What are some things that I need to do from a purely marketing standpoint? And the right term is programmatic marketing. What does that look like? That's what we'll be deep diving. But first, we're going to take a little bit of a pause so we can hear from today's show sponsor.
TLOP Unite is not your typical mortgage event. This is the first ever TLOP cruise experience built exclusively for originators. And for 4 days, it's not about the speakers, it's about you. We're talking breakout strategy sessions, real conversations, curated events, and uninterrupted access to a community that helps you grow. If you're serious about taking your career to the next level, this is where you need to be. Space is limited and the price is right. So click the link now and learn more.
All right, so we're back. Is there any particular direction, Mike, that you'd want to take today's episode?
No, I mean, I think I could start the conversation and we'll kind of, work off of each other throughout the episode. But I want to start by saying, we just had that episode on are the riches and the niches. And this is kind of outside of that. But if you're going to find yourself having a direct strategy, like a direct marketing approach to, like on the retail side, to the consumer, where you're marketing directly to the consumer saying, hey, I'm a loan officer and I do mortgages and I'm the best out there, you need a niche. So like we've talked about VA before, like VA type of loans. That's one of those channels that you can market directly to the consumer and see some sort of return.
Because in general, you would probably not advise that many mortgage brokers or many loan originators actually spend their money and their resources directly marketing to the end user, which is the consumer.
Unless you have a creative approach, right?
Correct. But like if you start trying to do that in your local market, you're not Zillow.
Yeah, because I'll tell you,
you're not Rocket.
Let's say you want to run a bottom of the funnel Google ad campaign, right?
Okay.
You watched your YouTube video on how to set up a Google ad campaign. You got the $500 Google Ads credit that you get when you open the new account. You're ready to go, and you're targeting these bottom of the funnel, low interest mortgage.
And by the way, bottom of the funnel is not bottom of the barrel.
Right.
Bottom of the funnel is actually what you want, because
Yes.
these are the people that are most willing to actually click and need your product or service within the next 3 weeks or 30 days.
Yeah, think being granular. These search terms are very targeted and they're long tail keywords. So they're a longer phrase that this user is searching.
Okay.
Versus something broader, like let's say mortgages, right? So I'm typing in low interest mortgage for high credit score. Okay. That's my long tail. That's what the user's searching in Google. I run a campaign.
Or they're searching for down payment assistance for first-time home buyer.
Boom.
And
yeah.
then they're finding that.
Okay.
Yep.
Actually, that one's a little different, and I love that example. Let me target that next.
Okay.
But this one in particular, you are going to have dozens of ads that they have the Rockets of the world, right? The Zillows of the world. I mean, they have deep pockets.
Yeah.
So like your small ad spend, if your campaign is not running efficiently, if it's not perfect to the T with, having extensions, right, built into the ads themselves, with having the descriptions maxed out, with using the max 5 variations that they let you have, the headlines, you're using your primary keyword in there along with supporting keywords, your structured snippets, like all these things. If you're not really dialed in, it's going to be a lot more expensive for you to bid for that top spot on Google. Okay. So you're going to spend a lot of money for that. Your cost per acquisition is probably going to be higher than your payout for these leads that are coming in.
Yeah.
Okay.
And the leads, I'll tell you from experience, it's a commoditized lead.
Yeah.
These
correct.
people don't know you. These people won't refer to you.
Right.
So there's no trust factor, which means you're only going to gain their attention with your price, with your fees.
Exactly. And then, so moving on to that other search term, right, where you're targeting down payment assistance, like FHA, that one's a little more niche. Like that's a little more like our VA campaign, where you could maybe get away with it. However, the market's saturated. You're going to be running against a lot of other programs.
Okay, so if I'm hearing you right, Mike, normally we would say stay away from the niches, except for when you're marketing. And when you're marketing, instead of trying to throw a wide net, which this was the mistake I made, I would try to throw the widest net thinking I'm going to catch the most people.
Right.
And you actually taught me, and others later taught me, that no, Dustin, when you throw a wide net, you're just going to attract nobody.
Right.
Versus like get out your sniper rifle. It's not that I don't do 20 different loan products. It's not that I don't serve all these different borrower types. Mm-hmm. All it means is that for this ad, I only want to focus on first-time home buyers looking for down payment assistance, or veterans needing to refinance, or veterans looking to purchase.
Correct.
This is where you want to niche down.
And now, like, so we got Google out of the way, because I did want to touch on that, but that's not the primary channel, right? When you talk about programmatic marketing, it's a piece of it, right? It's not the primary channel, but we kind of got Google out of the way there. That's intent. Users have a need, they're searching for something, and you are going to put a text ad in front of them or a retargeting ad that's going to follow them on other platforms in Google's search network.
Who would normally do that? Like, would an individual originator do it? Would a branch manager do it? Or would it be a company owner that would come to you saying, hey, we run a business and our business model is X, Y, and Z. We feel like programmatic marketing will work well into my business. Because, by the way, it doesn't work well into every business.
Right.
Like, there's certain businesses, if you truly are by referral only, if you truly are building out referral networks, it's a slightly different sales process when you start wanting to spend money creating leads online.
Yeah, and I mean, and it's a loaded question because it's like, if you have the support of a big company, like I'm going to go into the realtor world, right? Because I know more names, or I could go cross country. Let's talk about
let's
cross
say,
country. You got a huge company, right?
Yep.
Cross country's big. The consumer is going to come in from that lead, and you might have a landing page that you get to co-brand that has cross country on there, right? You're qualified, right? That's kind of the biggest piece of this is that lead is going to come in. They had a need. You happen to outbid the Rockets of the world and the Zillows of the world, and they land on your page. Well, now you have to establish credibility. And if you have a janky landing page and a brand that doesn't have a lot of reviews out there on the web, your social voice is terrible, well, it's going to be a lot more expensive to actually acquire that lead after they visit your website.
Because if they go to my website, they have to fill something out, correct?
Yeah, and they're going to leave, right? Because you didn't establish trust.
But you're saying if they come to my website and there's nothing to fill out, they're definitely going to leave.
Yeah, or if there's not a household name, like a cross country, like you're seeing this big brand that's backing you versus, Dustin Owen, the new LO with a janky website that doesn't look qualified, you lose the trust of the consumer.
And by the way, this is not for this topic. And Cross Country is the number one retail lender, and they've earned that, right? Very respectable company. I would argue that most consumers have never heard of Cross Country Mortgage.
Right, but their ecosystem is very qualified. Like it qualifies them and it builds the credibility in the consumer's eyes.
Yeah, but if I'm an LO and I'm working at Cross Country, I still might not use Google as a way to generate leads online if I'm trying to generate leads online.
Right.
You're saying there could be a different path.
Yeah, so let's tap out.
Okay.
Let's tap out of Google, okay? When we say programmatic, I think it's important to fill the audience in on.
Oh, please do.
When we say programmatic is multi-channel targeting, multi-channel advertising, and these channels are connected. And whether that be a landing page that has a Facebook pixel, a snippet of code that captures user data, or it's Google Tag Manager that you have embedded into the website, these different channels can communicate with each other. So if you drive someone in through Google, through a bottom of the funnel search, and they leave, well, now you have the data and your meta pixel saw that data and you can retarget them on Instagram and Facebook. So programmatic is the connection of all of these different channels together, forming like a multi-touch point campaign to work the user down the funnel and eventually fill out a lead form and become a client.
Yeah, and we're sharing all this because at some point you are going to get to this stage in your career where you're thinking, I want to do something different.
Yeah. I
want to do something more. Now, I've a friend of mine, shout out to Mike McAllister, and Mike says to me over at Empower LO, he's like, look, his product and service, at least a couple of years ago when he and I last talked about it in great detail, he's like, I would tell an LO to first figure out how to do 4 to 5 loans a month.
Yeah.
He's like, figure out how to do 4 to 5 loans a month based on your circle of influence, you being a subject matter expert and the most known originator in your local community.
I agree.
Before you start stepping into this world, because this world's going to cost money.
Oh, 100, and don't expect a return within the first couple of months. I mean, you have to optimize these campaigns. You have to watch the data. You have to know what data to be watching, right? Click-through rate, impression frequency, like. There's a lot of signals.
And this is not for the LO to do.
This
is the LO would have to find.
It's for the right LO.
They'd have to find their own marketing mic in their market.
Yeah.
And contract that firm to work with them.
Because I think a lot of LOs make the mistake of getting targeted with an ad from Facebook saying, hey, run ads through Facebook. And they decide to take on that task alone, solo, without hiring a professional, and a lot of money does get thrown into it, and your cost per acquisition is quadruple, quintuplet what it would be if you used a professional to run the campaigns. However, the right LO, right? We know a few of those. The right LO that's very hands-on, tech savvy can accomplish this. It is possible, but you're talking 1 in 1,000.
Well, and I would tell that LO, buy back your time, homie.
Yeah,
like, buy back your time.
Worry about the loans.
You do what you're great at,
Yes.
and continue to do it. Like what got you here.
Yeah.
Let's continue to focus on doing that, but understand that what's going to get you there may require something different or something else. Let's add an extra story to our building. If we were in construction.
So let me slide into meta.
Yeah.
Let's slide into meta a little.
Oh, 100%.
Yeah.
No, we need to. But I also I needed the LO to know. And when we say the word LO, put in the word realtor, put in the word insurance agent. Like,
right.
We all do something very similar where we are solopreneurs. Many of us work for national companies, but we work for first name, last name, comma, LLC. Mike Siciliano, comma, LLC. Even if you worked at Cross Country or at Lower or at Academy, or Academy's not even around anymore, but let's say Guild bought Academy.
Yeah.
American Pacific, like I can just go on and on and on. She kept going. A little Snoop Dogg for you for a Tuesday morning. But no, so let's get into, we touched a little bit on Google, enough that you made my head spin.
Yeah.
Most people are more familiar with Facebook ads.
Yeah, absolutely.
Most people have even probably tried to dabble in Facebook, or members that I've coached in our coaching community have said, how are Mike and Sue getting so much business on Facebook and I'm not?
Yeah. So Meta, let's say Meta, right? Because the advertising world has transitioned into Meta being the platform that you run Instagram and Facebook
Okay.
on. So they're both under that umbrella. So when we say Meta on this episode, it's Instagram and Facebook targeting. And now what's super interesting is 5-6 years ago, Facebook used to primarily be kind of your more of your boomers that you were targeting, right? And Instagram was your younger generation. Well, those have since blended, right? We have an older demographic for the most part now on Instagram as well. So
And what do you mean about older? Are you saying like 36
Age.
to 66?
yeah, 36 to 66 is a kind of a good broad range
I mean, the average age of a first-time home buyer is 41 right now.
which is perfect.
And
that's why, but when we talk about TikTok, I know we're targeting, we can target because we have, you're filling me in on this, the TikTok live method that you'll be experimenting with, which is awesome. It is a younger demographic though. When you look at that demographic, the average age is going to be a 25-year-old. So you are targeting a younger demographic. What was cool about TikTok when it first came out though was it was even younger than that. You were an average age of 18, but you were targeting the kids because they were then going to their parents to make the transaction.
Yeah.
So that was super interesting. Shout out Gary Vee because he was the one that was preaching that for a while. So let's talk about Meta.
Yep.
Meta advertising, it is driven by creative now. Again, 5 or 6 years ago, you would layer interests that would try and serve the ad to a potential home buyer, somebody that was in market to buy homes. Now it's totally changed. The creative builds the audience. Okay. And I'll give you an example.
Well, and I think Meta even got in trouble, especially with housing.
Yes.
By allowing people like us to target very specifically who we wanted, at which point there is an issue of discrimination. And then Meta changed their
And
rules
that's
and made
why-
it way more difficult,
Yeah.
especially for someone in housing, whether it's mortgage or real estate, to run targeted ads
Correct.
at strangers.
Yep.
I do want to ask you about targeted ads at non-strangers.
Yep.
But
here's what's interesting about that. That's cool that you teed it up. Okay. We cannot run ads in this industry, in any sort of real estate industry, right? Whether it's commercial or residential, we can't run ads without declaring a special category. So now you do have to declare the special category of housing.
What do you run? Because you run our ads at TLOP. What are we under?
So some of our ads, I do need to declare housing.
Okay.
And we actually have a dedicated support rep because my agency spends so much on Meta. And I've had to get our support rep on it and have it lifted, but from time to time they can't. So this special, that is why, because of the special ad category, what that does is limit your targeting. So now we can't be as granular. We can't say Sue between the ages of that lives in Tampa within a 5-mile radius, right? They're looking at all these signals and we're limited as to what signals we can run. We can only run, I think don't quote me on it, drop a comment if I'm wrong, but I think it's a 15-mile radius.
Okay.
Is the smallest you can run. So that limits you in your targeting, but that is why, as I mentioned, the creative is so important, because the creative is going to build an audience based on the user that's engaging with the ad.
So is that why, like for us, we're selling coaching?
Yep.
At the end of the day, we are TLOPS Originator Coaching.
Yep.
And we're selling coaching to mortgage brokers, loan officers, and lenders. And Mike has me start just about every piece of content with loan officers.
Yep.
Branch managers, like
Yep.
some kind of a word that catches quickly.
Yeah.
So if I were a loan originator, I was running a mortgage branch and I wanted to do some programmatic marketing, I would have to start with Homebuyers.
Exactly.
Right,
Are
like-
you in the market to buy a home? You know, are you looking for down payment assistance? Are you whatever that?
Are you a
hook is.
veteran?
Are you a veteran?
Wanting to leverage your VA benefits to house hack?
Exactly.
If so,
Nailed it.
tune in.
And what we're doing
Listen
is,
to this.
and what's beautiful is, only the right consumer is going to give us a solid view through, right? A 3-second, 7-second, 10-second view through. And the algorithm is watching this. So if that, and because the idea for Meta, they want us to deliver content that keeps users on their platform.
Okay.
And do you know why?
No, why?
They want you to do this so that they can sell more ads. The longer users are on their platform, the more ads that they view, right? So it's a vicious cycle. We're the advertiser, and we're actually keeping people on the platform, and they're going to reward us as advertisers. And this is the same with organic content, hand in hand. They reward you for keeping the user on the platform. So the more the view through, the better, and you're building an audience of targeted users. It knows that this type of user that meets all these interest layers, the age, the Facebook groups they're a part of, their location, all of those signals are being compiled, and they will try to match a profile that is similar, because they know if they do that, not only is the advertiser going to get a return and spend more money, but that consumer is going to be the right consumer that stays on the platform longer. So they go hand in hand.
So let me ask you this, and I want you to speak to all three of these avatars.
Yeah.
Loan officers, if 2026 is going to be your breakout year, this matters. Most originators don't struggle because of rates. They struggle because they don't have systems, structure, or accountability. I'm Coach Christy with TLOPS Originator Coaching. Originator Launch is a 16-week small group coaching program designed to help you build a real business, not just close the next loan. You'll get weekly live coaching, proven scripts used by top producers, real accountability, homework that actually moves the needle, and 2 private one-on-one calls with your coach. This program is capped at just 10 originators, so the attention is personal and the results are real. This isn't a course you watch. It's coaching you execute. If you're ready to stop guessing and start building with intention, apply now. Spots are limited, and once they're gone, enrollment closes. Register today.
If you are a real estate agent and you want to generate leads on Meta, do you recommend it? And if so, how? So I'm a realtor, and this doesn't have to be super in depth. Give me the 90-second version of yes or no. Should real estate agents spend their money on Meta ads?
Okay. Totally loaded question. You know that. But nothing beats referrals. Let me start there. Okay. And I'm a digital marketing. I built a life, I built my life on marketing, but nothing beats referrals in all of these industries.
Okay.
So if you are going to have a budget for digital advertising and you're a realtor, yes. I mean, not from an organic approach like Facebook groups, being a part of Facebook groups and consistently on the days that they allow you to advertise, posting yourself, giving yourself a shout out, having others post you and give you a shout out in Facebook groups. But yeah, I would run video ads targeted to a specific location down to that 15-mile radius. And, if you can get as granular as if people are like emigrating out of a certain area and into a particular area, targeting an ad in that area that says, hey, area A, are you looking at area B? Right. And so that's a highly effective strategy that we've run before.
Like I could run New York City for people wanting to live in Orlando, Florida.
Yeah. Or
Right.
if you know there's a big push from, like right now, I think there's a big push in South Orlando going up into Mineola.
Okay.
So you can get as targeted as like, hey, Hunters Creek,
Yeah.
are you looking at moving out to Mineola? So getting the creative to hook the correct user within the first 3 to 5 seconds is critical for these ads to perform. So if I'm a realtor, yes, I would, but you have to be comfortable putting yourself out there, getting your face on camera. Now there is, which I'll talk about in a minute because I know we'll probably slide into it. There is a way where graphics actually are a better approach when you're running ads on Meta.
Okay.
But
Well, so then let's just tackle the insurance agent.
yeah,
Like if I'm an insurance agent, is it advisable for me to run ads on Meta? But when I say run ads, like the realtor's easy. They are running to the end user. The end user is that home seller, is that home buyer.
right.
Insurance agent, are they going to run similar ads where they're looking for people who need a homeowner's insurance policy, they need an auto policy, or they need life insurance?
Strictly Google.
Strictly Google.
Yeah, Meta's very difficult, right? It has to be the right user, right? Your high-end consumer that has an estate, has a boat, has a couple cars, has a luxury car, like, you know, they're looking for Chubb. They're looking for other kind of carriers. They know which carrier they're going for, okay? So you're going to be spinning your wheels on Meta trying to educate that user, but even your kind of low-end user, right? That just kind of needs the cheapest policy possible. They're not gonna get the whole value of the house covered, right? They're gonna reduce it, and they're kind of tire kicking. It's hard to attract them on Meta too. It's hard to say the right thing in the ad to hook that specific segment.
And I'm sure that's somewhere with like medical sales, or how about this? A title company. Like if I'm a title rep, because all of our loan officers should be tied in with at least one, if not two, title reps where you all collaborate together because you both call on the local real estate market and provide value to try to build a relationship, to try to generate leads, to fund more transactions, etc. Could a title agency benefit from programmatic marketing, and what would that look like?
Absolutely, and that's going to help me segue where I wanted to go into the graphics.
Okay.
Title company has to be strategic, right? Because their end user would be a realtor.
Yes.
They want a realtor that's going to choose them to be their title company.
Yeah.
Right? So they're going to try to draw as many realtors as they can into their ecosystem. But how do you add value to a realtor? Okay. A way that I actually built out before a campaign, we target these realtors by almost not necessarily like a scare tactic, but piquing interest through these are the 3 legal challenges consistently faced at the closing table, right? The 3 legal issues that can happen at closing. And your title company most likely has an attorney that they work with. It doesn't need to be an attorney, but that'll certainly qualify what I'm going to lead into here much better. You get the attorney to put on a webinar for these realtors that explains those 3 legal challenges. So you've piqued the realtor's interest. They're going to sign up for the webinar through your platform of choice, whether it's Zoom, whether it's Roam, whatever it might be, shout out Roam, whichever platform they choose. And you're getting the data, right? And that's where the programmatic marketing comes in, because they're going to join this webinar, but now you're going to cross-channel this realtor into your email list, right? You're going to build out for this title company, and you're going to touch this realtor with value whatever cadence you choose. If it's a week, 3 weeks, whatever your budget can support for building out that funnel. But that's where the programmatic piece comes in. So when you're running this ad, okay, because LOs, I think this fits well for LOs.
Well, that's where we're leading to. It's like, look, most of our audience are loan originators,
Right.
mortgage brokers, branch managers, etc. Would you recommend hiring a you to do programmatic marketing for loan officers? And if so, what does that look like? Minimum ad spend and the type of campaigns you would recommend based on all of your experience.
Yeah, I mean, it'd have to be the right me. You have to hire the right me. I would try to negotiate a results only, maybe a cost per lead, some sort of structured rate like that versus a fixed monthly. Give a me 3 months, expect to have 3 months of this, which is going to essentially be 3 to 4 stabs at this type of campaign I'm about to pitch.
Okay. And are we, maybe I'm jumping ahead, are we chasing home buyers and borrowers, or are you afraid that that avatar is too elusive, too expensive.
The only way
or
we
too
chase
saturated.
the only way we chase that avatar is how we began this episode. Is if it's a hyper specific niche like VA,
Okay.
like FHA down payment assistance, like how to buy your first house type of webinar.
Yeah,
but
reverse mortgage.
I don't recommend it.
How to buy your first investment property with no money out of pocket.
Exactly.
Yeah, you'd have to get
Right?
that specific. Not even niche, just specific in your ad.
Correct.
Specific in what you're gonna be offering.
Yeah.
So that only those people see the ad.
Yep.
And only those people are calling you.
Exactly.
Because that's going to keep your cost per lead down.
Yeah.
Which then would hopefully make your cost per acquisition affordable.
Absolutely. Yep. So
All right. So, but I think what you're getting ready to say is how to be super successful, but stop chasing the end user,
yes.
right? Like this is where I think most originators get it incorrect. They want to use programmatic marketing to find more home buyers and more borrowers. But what do you think they should do?
It's very difficult through that approach. We just like we do with boots on the ground, like realtors. I'll say
Yes.
it. I'll scream it
Yeah.
from the. I'll Tom Cruise on this chair right now. Like it's realtors. We need to attract realtors, and how do you do that? Realtors are, their feed is saturated with a lot of use, right? So you got to think outside of the box. You want to put on some sort of webinar, right? And we're big on webinars right now.
Virtual workshops.
Virtual workshop, right? But it can't be fluff, right? It needs to be something of value. What's an example of something of value that you would put on?
Well, yeah. So like I actually put on one free masterclass a month for the TLOP coaching community. So this is when they invite all of their realtors.
Yep, the Realtor
to
Success Series.
The Realtor Success Series. And it's a member-only benefit.
Yeah.
And I do this because I built my entire business as an originator off of leveraged events.
Mm-hmm.
And I also built an entire division off of leveraged events.
Yep.
So leveraged events, they work really well. And we do it today to continue to grow TLOP.
Yeah.
So one that I recently taught was how to attract more real estate investors so that you can fund 4 to 6 more transactions this year.
Yeah.
So I was very specific. This is a class for realtors on exactly how to attract real estate investors.
Love it.
And then the one I'm teaching this month is actually going to be 10 things realtors must know about lending in order to stop wasting their time.
Yeah.
Right? So I'm going to give 10 best practices, and it's all about wasting less of their time.
Or how about even like, and correct me if I'm wrong, right? I'm not an LO, but you're missing out if you're not educating your buyer on these 3 loan products.
Yeah.
You're missing out if you're not.
But I mean, you could do something that was how to increase your lead conversion in order to sell more homes and make more money.
Yeah.
Or you would say how to attract more home buyers using only 3 loan products.
Boom.
Right? It's
Boom.
How can real estate agents make home ownership more available, more affordable, more attractive?
Yes.
And like you need something hooky.
Yeah.
But you're going to get them in the door.
Right.
So you're saying run ads.
And
for
what you're
events.
Exactly, right? So let's call it events. Let's just put it under that umbrella. And again, we've talked about it throughout the episode. You need to hook the right realtor, the right user. And how do you do that? You say exactly what the offer is within the first 3 to 5 seconds of this ad that you're going to do. However, what I found over the last year or so, right? We've run a lot of ads in a lot of different industry verticals, and this is not vertical specific to the mortgage industry, but we're finding that for events, an informational graphic, and this is totally contrary to what it should be. Informational graphics are performing much better for these webinars. Our costs per lead per registration is 1/4 the price when we're running these graphics versus these videos. And that blew my mind. And this is a consistent data trend that we're seeing recently. Can't give you the why behind it because for a while there was the 20% rule on Facebook. You couldn't have more than 20% of the graphic be text, because if you did, you were penalized and the post wouldn't get as much reach. That went away, but there's a lot of different things that Meta, comes out with.
Yeah. So the biggest takeaway right now that I've pulled is for loan originators specifically, don't think you're going to run ads in order to attract home buyers and borrowers.
Correct.
You can, but you're going to be
competing. VA, right? VA, you can all day.
There's ways you can do it. And, but when you do it, you're competing against people who have way more experience, way larger teams, and way deeper pocketbooks than you do.
Yeah.
And that could get frustrating. However, you can take a little bit of what you know versus a little bit of what you don't know, right? You know how to bring value to real estate agents.
Yep.
You know how to build a business based on referrals from those types of agents. You could use programmatic marketing to attract more of them so that instead of you having 100 realtors in your database, you have 200, 300, 400, and really grow your influence through education.
Yeah, and I challenge anybody that decides like, hey man, I'm going to take the leap of faith and I want to try to do this, right? You're going to make your graphic, you're going to make your ad copy, use your potion of choice, whether it's Claude, ChatGPT to give you a hand. Hey, you're a meta advertising expert. I need X, Y, and Z. My end user is, prompt it like that. Go with the graphic to start out. You don't even need to be on camera. It'd be nice if there was a silhouette of you in the graphic because it'll humanize the webinar. Put the value proposition in there. Make sure that the value proposition is the largest thing so that, again, only the right realtor is going to see that graphic and engage with it or stop their scroll. Stopping their scroll counts. The algorithm sees it. You'll build your audience, you'll target them. You should be anywhere between $6 to $15 cost per acquisition on these registrations.
So you're going to spend $16 just to get someone to register.
Exactly.
Which probably means you're going to spend $30 to get them to attend, because you typically, when you're doing a free event, from experience, you're only going to get 50% of those that register on the call.
And I would plan on a $600 ad spend on this. You get a good handful of realtors that are on the call, and during this event, during this webinar, you're going to give them your value proposition, show them you're an expert, show them that you will be able to treat their home buyer at an elite level that they won't be able to get from another LO outside of it.
And I'm assuming, and I want to be cognizant of time here, but I'm assuming that when you're doing this type of programmatic marketing, you have to be able to drive them to a landing page. That landing page has to be able to capture their information, as well as have some kind of a CRM automation, because it's like when that person registers, they need to have an email that goes out promptly, instantaneously, as well as some kind of a campaign, because between them registering and the actual event, it could be 3 days or it could be 3 weeks. And you definitely don't want to have those people forget about it.
So if you're going to have and if you're going to have a complex programmatic approach down the road and you really want to invest in this, 100%, build the landing page. A hack for the LOs out here, right? Because we're about providing value. It's not about selling things.
If you're a licensed originator who's closing loans, but you're not consistent, this is for you. If you're brand new or just looking for motivation, trust me, this is not for you. Most LOs don't need more information. They need structure. They need proven processes and somebody to hold them accountable. T-Lob's Originator Coaching gives you weekly live coaching, scripts top producers actually use, and step-by-step business systems you can implement immediately. Not someday, we're talking day one. You're not watching videos alone. You're executing in real time with other originators who take this seriously. Right now, you can try it free for 2 weeks. That's 2 full weeks for free. You'll sit in on live coaching calls. You'll get access to the frameworks and see exactly how top producers run their business. If it creates clarity, if it creates momentum, or even if it puts wins on the board, you keep going. If it doesn't, no worries, you can cancel. No pressure at all. Click the link, start the 2-week trial, and finally, build this like a business, not a side hustle.
I'd try to sell you a landing page all day, but this is free advice here. I would run it through entirely through the webinar platform, whether you chose Zoom, whether you chose Roam, right? The end user is going to click to register in your ad, because that's going to be the CTA you choose. And they're going to be brought to a Zoom registration form where you're going to collect the data. And from there, you can set automatic follow-ups via text or via email that Zoom will send. So they'll send the reminders for you.
Okay.
That's just a cheap way to get this
Yes,
done.
I like
$600 ad spend, create your graphic, and give it a shot and have some sort of outline and curriculum on the call so that this doesn't backfire.
And I would tell you, if I was your coach, and be willing to do this for the next 12 months.
Yeah.
For the next 12 months. So it's $600 times 12.
Swing the bat.
You're $7,200 all in. You close 2 loans from this.
Right.
It pays for itself.
Right.
But more importantly, we're not trying to close loans from this. We're trying to get realtors onto a call. So then you can follow up with those realtors, maybe with a face-to-face meeting.
Get the referrals.
Get the referrals, build the relationship, and then obviously start adding the realtors into everything else you're doing, whether it's your social selling strategy, whether it's your weekly newsletter strategy.
Do some research, pick up an email automation tool, get all the registrants, the app for the webinar, load them into your email automation tool, and just touch them over the next 6 months somehow. It's
well, if you're writing a newsletter, whether you're using Beehive or MailChimp or your CRM to distribute it,
something simple.
Then they go into your newsletter list. They also should be people that you connect with on social. Then you should be following our 30-10-5-5-3-1 proven formula for how to network online. But what you're doing is you're grabbing data. You're grabbing real humans who actually sell real estate for a living, or at least they're trying to sell real estate for a living.
Right.
And you're getting them into your funnel. You then have to massage it and work it. So let me ask you these last 2, and they'll be quick because I think they're going to apply to what we just talked about.
Cool.
Well, one I know does. One, no, it might not, but you're going to have some pretty detailed stances on why you either like or don't like.
Okay.
So the first one's the easy one. Everything that we just said that you could do as a loan originator to attract realtors, you can do that for home buyers too. Right? You don't have to say click here for a VA loan, click here for a HELOC, click here for a DSCR loan. You can say click here for a registration to a free virtual masterclass that we're teaching. And again, you may want to go niche on it.
Yeah.
Or not niche, but granular. Very, very hyper-focused.
Yep, good word.
Where we'll be teaching, 1 week you're teaching how to purchase your first home with less than $10,000 out of pocket.
Yep.
The next one you're teaching how veterans can house hack utilizing their VA home loan benefits. The next one you're teaching how to purchase your first short-term rental without ever touching your savings or checking account.
Love it.
Right? But you're not asking these people to click here and get a mortgage.
Nope.
You're saying click here and let me provide value.
Work them into your funnel.
Yeah. And I would guess, and I say guess, you and I talk about this, pretty frequently. If I were running a branch again, and I wanted to help provide leads to my loan officers, Mike and I, because if I were to run a branch, he'd probably be my business partner.
Let's go.
In this. So this is exactly what he and I would be doing.
Yeah.
I would be driving leads into the branch, both realtors and potential borrowers, by hosting 1 free virtual masterclass a week.
Absolutely.
It'll be 1 for LOs, 1 for realtors, 1 for LOs, one for realtors.
Yep.
And he'd be running the marketing behind the scenes so that we could gather the most eyeballs, get the most people into our web.
The right eyeballs, the right people.
The right of us,
Yep.
So just know that right there is an idea that I would deploy like yesterday if I were you. Again, assuming you're already closing 3, 4, or 5 loans a month.
Correct.
If you're not, 3, 4, or 5 loans a month is the baseline.
Yeah.
That is the baseline. That's a full-time originator with at least 2 years experience.
Circle of influence, boots on the ground, shaking hands.
Yes. Like you do 5 loans a month at an average loan size of $350. So now all of a sudden you're doing somewhere around 1.6 to 1.8 million. Depending on your comp plan, you're making somewhere between $15,000 and $25,000 a month. Okay, you're established.
Yep.
You're a good originator. You're successful. You're profitable. Now if you want to try to do something different, then that's when you would look to do this. But here's my last question, and we didn't touch on it. I've always wanted to take my database and upload it into Meta and run ads just to that database. So for me, my database was 500 realtors.
Yep.
My database was over 1,000 past clients, to where I'm not trying to attract strangers, Mike.
Right.
I just want these 500 realtors to be reminded that I exist and that I'm great at what I do, and I love it when they refer their clients to me. And then I'm going to want these 1,000+ past clients to know that I exist, to know that I am someone that is here to help and give back to the community, even if it means I'm not doing a loan for them.
Yeah. It's a great idea.
What's your experience with it? What's your take on it?
So, it's a very inexpensive channel for the attention, right? It's an inexpensive touch point. It's a great direct marketing strategy. And when we say direct marketing, we have a specific message to a specific consumer, and we know we're going to reach that consumer. That could be an email, SMS, list upload. So list upload into Meta, it's a good touch point to massage them in your funnel to stay relevant, to stay top of mind. You could do that for the realtors. You could do that for the consumers, right? It works both ways. And this is the best part. When we say programmatic, it's been brought up on this episode a lot. Send an email with a specific topic, have a piece of content with that same topic that gets sent out to the same list via Meta through display ads. And you can target them. That's 2 touch points, same topic.
Wow. Head spinning a little bit there. And my head was also spinning because I'm still trying to figure out, like, I keep on hearing specificity. When I hear programmatic, I hear specificity. I need to be very specific.
Yeah.
So if I'm uploading my list of 500 realtors, if my messaging sucks, I may just be wasting money.
Yeah.
But you're saying if you want to be specific with the message, like I could 1 month just run ads to those 500 realtors that all it talks about is how my team and I dominate working with self-employed borrowers because we have loan programs for those people who don't have traditional income.
Right. And
right. So then that month, I'll probably just be getting a lot of realtors calling me.
Right.
Because maybe they have a client who is self-employed.
Absolutely.
The next month, I want to pick something else.
Yes.
So it's less about like,
but
hey, I'm Dustin and I do loans for a living. You're like, that might be not be enough for them to move the needle to pull the trigger.
Yeah.
But if I got specific, then they would be more willing.
Think about the lifetime value of targeting that realtor, giving them that educational piece of content that says, I'm great with self-employed borrowers, and they remember that and they actually do reach out and use you. Well, you're going to be their lender of choice in perpetuity until you fumble the ball.
Yeah.
The lifetime value of that small $600 ad spend for that webinar, I mean, it's exponential.
Well, that would even be a webinar. 'Cause I think the webinar was one of my ideas. The second idea is I just want to have a list.
Yeah.
Now I want to upload my list of men and women who know me and I know them, and I just want my ad to be shown to them. Past clients. I have 1,000 past clients.
Yeah.
Right now, interest rate market with what's still going on in Iran, still not benefiting us.
Right.
But let's say we lived in a world where rates did drop below 6% the way they did towards the end of last year. Mm-hmm. Could I not then run a ad only to my 1,000 past clients?
Right.
Where it says rates are below the 6s. If you haven't already, reach out to me. It's time for us to make sure your current home loan is still the best home loan for you.
100%.
Okay, so you're for this. So let me ask you this question, put you on the spot.
Yeah.
Through our relationship with our friends over at Redder, right, we have access to their data. We've been able to pull our own list. And I gave you a list of, let's say, 300 producing branch managers who have at least 5 LOs.
Yeah.
And I said, hey, Mike, we're still really trying to blow out this Caribbean takeover event. And these are ideal avatars for us. A branch manager who has 5 LOs would 100% use our TLOP Unite Caribbean Takeover sales event to reward those that are doing a great job. They do it for team building. They would do it for camaraderie. They would do it also because they want to see their LOs all level up. They want to do it for retention. Have you started or considered running targeted ads to that list?
Yeah, 100%. However,
you have. Okay.
Yeah. So I'm working on that with Steven.
Okay.
However, we're doing it a little bit different, right? We have a limited budget. Our budget goes towards a lot of different products that we offer.
We are still a startup ourselves.
We're still a startup ourselves. So this limited budget that I have, which is still pretty healthy, we need it to go as far as possible. So what we're doing is we're localizing the branch managers that we're pulling. We're localizing them to Florida, right? We're not pulling it nationally because Florida in this case, and I would love for everyone around the country to come on this cruise, and you should.
Well, we have 4 people coming in from Alaska.
Yeah, that's what I'm saying. They're coming from everywhere.
And
but
we have 10 coming in from Massachusetts.
Yeah, for the sake of targeting and our budget, that's the only reason why I'm only pulling Florida. Short drive, right? You might not have to hop on a plane.
Florida, Georgia, Alabama, South Carolina.
Yeah.
You don't have to fly to Orlando to go on this cruise.
And your script is something along the lines of branch managers are you looking to level up your team's productivity?
Okay.
TLOP Unite is a first ever blah, 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 blah.
Okay, so but we are doing it.
Yeah.
But you went one step further and
Yeah.
said, I'm not going to run this
Nationally.
Because I gave Mike a list of like 300.
Yeah.
And you're like, no, I'm going to find the 30. Those 30 are going to get the messages first.
Right.
Then maybe we'll look at, if the budget allows it, to push it into Georgia, Tennessee, South Carolina, Alabama.
Yep.
Before we drop the budget on a bunch of people in California
Yep.
who are like, dude, I love TLOP and I would love to be a part of this event, but not everyone wants to jump on a 5-hour plane ride
Right.
In order to get to Orlando. They're going to wait for us to do this event out of San Diego down to probably like down to Cabo and back.
Yeah,
right?
exactly,
Like,
yeah.
Like, hey, would TLOP ever do a West
Yeah,
Coast
I'm in.
event? But no, Mike, this was really good. And look, if you're like me, there's a certain part of today's episode where your head was spinning. That's okay. Like, you can use the comment section. Our entire team looks at those comments. We reply to those comments and, ask your questions there. But this was a topic that keeps coming up. And I'm like, well, let's go ahead and let's approach it. Let's discuss it. And at least let's get people pointed in the right direction, which I trust that that's what we would do today.
Yeah.
So on that note, y'all, thanks so much for tuning in. If this was your first time, hey, welcome. We're TLOP. If it wasn't your first time, which for many of you it probably wasn't, we just say thank you. Thank you for so much for coming to hang out with us twice a week, every single week. Look, we'd love to have you on the cruise. Come check it out. We'd love to have you come coach with us. Come check us out. And we love it when you share our content with other people that you know would just benefit from the stuff that we put out. He's Marketing Mike. She is Special K. I am Dustin Owen. This is all the time we've had for you today, but we do look forward to catching you on the next episode. Peace.